Hi, this is Jack. This is my bar by bar analysis of ES S&P 500 E-mini futures contract for December 4th, 2024. First bar of the day, relatively small bar for the first bar of the day. So not a lot of urgency to buy up here, not a lot of urgency to sell yet. The bar is maybe 5 points big or so. Prominent tails tells me that we're probably going to go sideways. And that's what we did on bar 2 and 3. Small flag, so breakout mode. And I expect whatever breakout we get eventually to fail within a couple of bars. So bar 4, we're trying to break out, and it's already failing. Prominent tail, probably sellers above. Instead, buyers above. We rallied on 5, but can we get follow through? We're trying to break out of the 1 high, and I expect that breakout to fail. Certainly it did on 6. Here's the first 6 bars of the day. Now, if you knew nothing else and you could just look at the first 6 bars of the day, what kind of day do you think you're going to have? I would bet we're probably going to have a trading range day. I'm going to zoom in a little bit so it's easier to see. So bar 7, traders sold to close the 6, and we sold off on bar 7 for a second leg down. It's a couple legs up, now we have a couple legs down. We found buyers below 1, so it's reasonable to expect buyers below this bar. Sideways on 8. Probably buyers below for a second leg up from the breakout. But instead, we went outside down on 9. Curious, why did we go outside down at 10:15 in the morning like this? This is probably the biggest bar of the day. So probably news related, but that doesn't matter. The only thing that matters is the price action. And if this is so bearish, how come we didn't break out below 7? And how come we're so far away from the moving average? And how come we gapped up so much? And how come these bear bars have significant tails and bad follow through here? So is it all that bearish? I'm not so sure. Probably always in short, at least it is according to my indicator, but probably buyers not far below. Strong breakout below 9 and then a big reversal up. Big bar, big risk, signal bar for the bulls for the stop entry, but man, probably a little bit more down before we rally too hard. Failed to break out on 11 and pulled back, but tested the low close 9 and reversed up. So possibly buyers down here. It's a big 2-legged move down, so it's reasonable to expect a bigger leg 1 pullback, leg 2. But that leg 2, based on the selling pressure here so far, though it's a lot of price control, it's not a lot of time control, we probably will not go straight up for the second leg after the gap. Bar 12, inside bar, then a small pullback and a rally on 13. Reasonable to buy above 12, but man, tight trading range, big bear breakout so far. Bulls didn't make much money with stop orders over here, not even a 5-point scalp, I don't think. But bears could make money here with stop entries. You could argue a bull made money buying above 8, but really not an ideal signal bar. And look what happened if you held, it failed. I think you did get 1 times your risk here, or just about. But man, the bears have made a lot more money than the bulls today, so I would expect sellers up here. Got the breakout and it pulled back. Did we get 1 R of this bar? Yes, we did, and then we sold off. So that tells you that everybody is scalping. Whoever sold 9, let's say you sold to close a 9, you didn't even get 1 R. So maybe use the tighter stop. And let's say that you sold below 6, you got 1 R, not quite to 2. In any case, stop entries in this type of market, probably not ideal, probably better to look to buy at support, like the 10 high, 12 high for a second leg up. And then maybe sell above here, expecting, well, we're channeling higher, it's a big gap up. We tested the EMA and rallied pretty strong. So honestly, I wouldn't even be interested in selling. I'd be interested in buying lower in the channel. Inside bar 15, bear breakout 16, but buyers below, big tail. If you're a bear and you took this stop entry, you didn't quite get 1 R, and you didn't get it at all. So 19, small pullback and then a sell-off. This is a pretty strong move down, and if I was flat, I would consider selling pullback. But if you look at these 2 bars, this could be a leg 1 pullback, leg 2 at support, the 12 high. Just a minute ago, I said it's reasonable to look to buy at support, and that's where we are right now. The only problem with buying at support are times like this, where we have a big, huge bar on 16 racing down to support. You know, do you really have the balls to buy right here with a stop where? Maybe a stop down here. And then if you do have a stop down here, you think a 60% chance we get here before here? I mean, maybe, but if there's any maybe in you, then it's not 60%, it's 50-50, and therefore you can't take that trade, or you have to use a tighter stop. You know, and now that I'm thinking about it, we have the EMA right here. We have this low close on 9, so that's a layer of support where we'll probably find buyers. So I'm thinking, if you do want to buy this pullback, I would think putting a stop below this low close, maybe somewhere down here. You know, what are the chances that we get here before we get there? Now that is a much better trader's equation to me. Think about what I just said. Buy the close of 17. What's the chance we get here before we get there? If you're a bear and you sell that close, it's not 60% we get here before we get there. It's maybe 50-50. It's probably less. And if you're a bull, what's the chance we get there before? It's pretty good that we'll get here, you know, and pretty good means 60%. So that's pretty reasonable. But that's what happened here. I'm not sure that I would have done that. I don't think I was watching the market that closely today because I had a busy day. So I can't tell you what I would have done. And I didn't do anything because I didn't trade. But I can tell you this, that traders saw 2 legs down at support, the 12 high, and they bought the close like hell. And we raced up back to the high close 15. Now the problem with 18, it's a big bar and big risk. It's only 5 points big, so I say big risk. But really what I mean is, if you buy the close of 18, you think we're going to get there before we get there? And I'm not sure. You can make an argument for a bull channel at this point, but really not ideal, especially after this big bear breakout on 9 and 10. I mean, this in and of itself should get a second leg down, and you could argue that could be what happened here. Or maybe it failed here on 10, 11, 12. But in any case, better to buy pullbacks in channels rather than buy the close and buy high. Because if we are in a channel, you know that the top of the channel is resistance, and we're very freaking close to the top. And you can't buy the close of this bar with a stop here at the midpoint, because chances are we're going to come back to this bad buy signal bar high on 17, which is right around the midpoint of this bar. So what do you do here? Nothing. You wait for a pullback. And if you don't get a pullback, you just say, no problem. 19, follow through bar, probably going a little bit higher, but needs a pullback. Inside bar, then a bull breakout, 21, channeling higher, 22. We may not come back here to test this signal bar, but I expect because of all this overlap and this slow grind higher that eventually we will. 23, inside bar, 24, another one, failed breakout on 25 and a reversal up. We did not get close. We did get close, but we did not get to the high of 17. So we have an open gap. That means there's buyers down here. So it's reasonable to start thinking about buying with a stop down there. 26, bear bar, weak close, trading range bar, fairly neutral market. It's a tight trading range up here. And because it's fairly neutral and it's a tight trading range, this gap may close. 27, we broke out below 26. It's 2 legs down, at least 2 legs down at support here, the EMA, the 17 close. We'll probably find buyers around here. Traders bought the close of 27 and we reversed up sharply on 28. This is a shaved bar, which in and of itself is a buy signal. It's reasonable to buy the close of this bar with a stop down here. But is the 60% that we get up here before down here? I'm not so sure. Small pullback into 29 and then a rally, probably going higher, but then a pause bar and another one on 31. It could be an implied 2 legs down, but I expect it's just 1 leg down. Now we could have 2 or 3 legs down and a failed bear breakout on 33 that reversed up. Bears are trapped right here. This is a reasonable stop entry signal bar for the bulls. I don't think it triggered on 34, and then we got a bear breakout 35. This is a pretty deep breakout, and look where it's testing. It tried to get to the 17 high and didn't quite get there. I expect us to go lower, maybe sellers above this bar. But again, another reasonable stop entry bar for the bulls if you think we're in a bull channel. But at this point, I don't know that we are in a bull channel. I think we're more in a trading range than a bull channel, at least at this point. 36, bad entry bar for the bulls, and it looks like a give up bar on 37. Back into the range, but buyers below, bottom of the trading range. Reasonable stop entry for the bulls, but channel down might be too tight. Bear breakout 39 reversing up. Stop entry for the bulls did not trigger. Maybe it'll trigger here. Good entry bar for the bulls on 40. Reasonable. You know, this is a better test of support. We actually tested the 17 high and found a lot of buyers here. So it could be a big leg one pullback, wedge bull flag to support, and then a rally for another leg up. Good follow through, 41. Reasonable to buy the close, 40, 41 with a stop down here. Add on during a pullback like 42, 43, 44. But then you start to collect bear bars, you got to be thinking we might be going lower and we might be double topping. You know, we're having a hard time getting to this round number 60.90, but we're holding support at 60.85. I find that ES really likes five increments of 5. So 80, 75, 70, 85, 90. All these are going to be important support or resistance. You can see what happened when we broke out below 60, 80. We found buyers. We found buyers. We found buyers. We tested 75, found buyers. We didn't make it to 70. Anyway, 3 bear bars. Might be wise to get out below that bar and look to buy lower. Outside bar, 45. Sell signal bar for the bears, and it triggered with a good entry bar. So reasonable to get out of your longs here and then look to buy lower. But reasonable follow through. Now we're channeling down, testing the bottom of the channel. And then a big bear breakout on 49. Wow, look at that bar. Trader sold to close of 48 and completely gave up. So now, today could have been a bull channel, but now it's evolving into certainly a trading range. But what's the problem here? It could be a second leg trap. It's an implied 2 legs down, and this is a climax bar. So that's why traders bought the close. And it's reasonable for bears to cover above this bar. On a line chart, it's a higher low from the rally. You could argue spike and channel bear, bull trend, trading range. Market is resetting here, lower low, double bottom. Good buy signal bar, reasonable to buy above that bar or buy the close with the stop down here. Deep pullback in a rally, 51, 52, good follow through, climactic follow through, 53. You know, very good for the bulls. Certainly this is the beginning of the second leg up from the big gap up. You know, it's interesting to see this on the line chart because you can actually see the spike and channel bull trend in its entirety, which is fascinating. You know, then we came back down here to support. We have a big spike, then we entered the channel here, bounced around a little bit, had a double top. You could say it's here and here. Double top and then a bear breakout, but the bear breakout is just a bear leg in a trading range. And now we're reversing up back to the top of the trading range. And it's interesting that this happened so quickly, but I think one of the reasons this happened so quickly is because we're in a trading range. Yes, it's a bull environment and this is a higher low. Maybe it's a bigger, broader bull channel, something like this, which is reasonable. But at the time of this bar, this is a trading range. There is no bull channel now. It's a trading range, so you have to expect trading range behavior. So buyers below, buyers at the close, we're at support, you know, round number here. Another probably failed breakout of 60.80, and we reversed sharply back up to the top of the range because that's what happens typically in trading ranges. You have a sell vacuum test of support and then a buy vacuum test of resistance, which explains why we find sellers on bar 54. Bar 54 is a scary bar. If you're flat and you see this bar, you might think, wow, this is a fantastic bear reversal bar, and it's pretty good context for a short entry. You could argue it would be a second leg down from 42 and a double top with 42. But what happened? We found buyers below that low. Why did we find buyers below that low? That's because overall, the day is in a bull environment. We're above the EMA for a lot of bars. We're above the higher time frame for a lot of bars. We're above the prior day's prior day high and the prior day high. You know, it's a pretty bullish environment. You could argue it's just been a trading range day for the most of the day. But look at this rally. This is strong enough for a second leg up. It got a couple of legs up within this rally itself. But if this is leg one and this is the pullback, this is about a 50% correction of this entire rally here. And we're reversing up from just below 50%. So very reasonable to buy below that bar I don't think I would ever have the balls to do that, but that's what traders did. And it's really important to recognize that. Just because you wouldn't do something doesn't mean that that's not the right thing to do. So buy the close 54, buyers below, reversing up. Very strong signal bar for the bulls for the stop entry, but big bar, big risk. And what do you think the odds are we get here before we get down here? And I'm not too sure, but we've reversed up from this price level pretty sharply. And then we rallied from that price level pretty sharply. So it's reasonable. I would just say, buy any pullback and then put a stop down there. So small pause bar on 56 and 57, but channeling higher, and then bull breakout 58. I think if you're flat at this point, I believe I was watching the market and I was surprised at what happened here. And I remember watching this thinking this is probably going to reverse, but then we get the bull breakout and that's a surprise. So I think if you're flat and you're watching 57 and then 58 starts to break out, pretty reasonable even here. Just buy the close with a stop somewhere down here. You're probably going to get there before you get back there, because we're moving away from this price level very fast. And then again, if you do buy up here, you're buying a breakout. You have to understand that this could fail and we could reverse down. So I would be quick to get out. Probably buyers below this low, so reasonable to hold with a stop down here and look to add on to your position here, but really tough to do. And we don't even get that opportunity. Let's say you have a stop at the low close and you bought at the midpoint of this bar. We're racing up to that 1 hour target pretty quickly. And it looks like we're going to get there. And then we did. Just fascinating. This is incredibly fascinating. It's a huge leg 1 pullback, leg 2. Just incredible. And this type of price action here, this late rally, at the middle of the day, end of the day, this does not happen very often, at least in my limited experience of the markets. So I think it's very fascinating. But channeling higher, tight channel up, it's a breakout on a higher time frame. But it's a breakout of a trading range. And look at the follow through here. Deep pullback, sideways, another deep pullback, sideways, bear breakout. And actually, bears almost got 1 arm. And now we're starting to collect bear bars up here. So the breakout may need to pull back and test support. Support could be any of these pause bars, this high close on 53, or maybe the high of 54. Breakout bar on 65, 2 legs down, collecting bear bars. It's a 4-bar consecutive bear micro channel, probably going lower, probably sellers above. If you're a bull and you held up here, you're probably sufficiently disappointed. You may sell out of your longs unless we get a strong move up. 60, pretty good signal bar for the bulls. Failed breakout here, 65, 2 legs down in an overall trading range. We have an open gap between 41, 44, the pullback, and here the 54 high. Reasonable to expect another leg up, but this second leg is certainly not as strong as this first leg, and it's leg 3 in what was mostly a trading range day so far. So risky, but reasonable. Pretty good entry bar for the bulls, not too much overlap, 67 moving higher, and then really good follow through, 68. What's the problem with 68? It's a bigger bar, bigger than the prior bar, bigger than that prior bar, and it's leg 3. So eventually we're going to find sellers and profit taking. 69 sideways, more sideways on 70, micro double top, 71 and 69, maybe moving lower. Looks like a failed breakout 72, but a failed bear breakout 73. So a small tight trading range. The market is starting to neutralize. Another good signal bar for the bulls, but it's leg 3, maybe leg 4, and we'll probably find profit taking up here, especially because it's nearing the end of the day. You can't see it, but here it's 15:30, and I think that's 2:30 or 3:30. In any case, it's the end of the day. Oh geez, I just realized you can't really see the market that well. So let me back up. 66, 67, consecutive bull bars, probably going higher. Good entry bar for the bulls. 68, strong bar, but climactic behavior. Body's getting bigger and bars getting bigger. And then a blow off top, 69. I say blow off top, and really I just mean a climactic breakout that looks like it might be failing. Then we start to go sideways, and we trap the bears on 73. But really, how trapped are the bears? Apparently, they're pretty trapped. 74, racing up to the big round number, 6,100. Big round number, leg 4, we're probably going to find profit taking soon. Instead, we go sideways and then rally outside bar, 76, but sellers above, and then selling off into the close for a couple legs down. Really fascinating day, you know. Pretty tough to handle these tight trading ranges, especially when you get big bars like 18 that kind of scare you into a long position. And that's why I keep thinking whenever I see a big bar that's just too big, I just keep thinking pullback, support, pullback, you know. And if you're here, where is support? Support is here and here. But then by the time you get here, we hold at this support level. Sorry, I had to pause the video there. My wife just got home and I forget what I was saying. I think I was saying that 28 is a shaved bar, and that in and of itself is a buy signal. So it's reasonable to buy the close here, stop down here, but tight trading range overall, and we're starting to channel down. Yes, this is above support, but we didn't get there, and we didn't get to the EMA, so I expect us to get there, and then we got there. But then we kept rallying. Oh wait, deep sell-off. I forget what I just talked about. Yeah, I totally threw off myself with all this. But anyway, fun day. You know, interesting market. Really tricky open. Expanding triangle open. I didn't catch that before, but it certainly is an expanding triangle open. But then you get 10, big reversal up, test of the EMA, probably going higher. Bull channel, yeah. But then breaking out of the bull channel, tested that channel line and rallied for a couple more legs into the close. So very fascinating. Probably better. Well, that doesn't really make sense. Anyway, thanks for watching.